Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol AESDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of InkResearch.ca. He invented the Inc. Canadian Insider Index, which is used by the Horizons Canada Insider Index ETF, a 2017 Fund Data Fund Grade A Plus award winner. His website, CanadianInsider.com. Welcome back to the show, Ted.
Well, it's great to be back, Jim.
Ted, the Fed is getting together next week. Are they going to engineer the solution to the auto and housing industry problems, or are they going to engineer a slow-motion train wreck?
Well, that's a great question. We tackled that very subject on CanadianInsider.com on a post I did back on the 11th of this month. Really, Jim, what we're trying to figure out with the Fed is, are they looking down the track for danger, or is the FOMC all stuck in the caboose, kind of looking the other way and looking what's gone by and maybe kind of what's happening here on a couple of the freight cars on the train? You know, any train engineer with their soul will tell you got to be looking down the track for problems. And all I hear from Jerome Powell is how great the labor market is in the United States, and that's all well and good, but that's all rear view window mirror stuff, Jim. We've had lots of problems in the housing market. There's no secret that the home builder sentiment is on the ropes. We've got falling real estate prices in previous very hot markets. There's a lot of warning signs, a lot of kind of red and yellow signals down the track that the Fed has so far ignored. But we'll see at their next meeting here on when they announce on Wednesday their policy decision, if they don't slam on the brakes on their monetary tightening, because if they don't, the Fed's kind of really risking a bit of a disaster here in terms of going too far and missing all these red signals. 2019 could turn out to be, more than just a train wreck. It could really start to unravel the growth story that's been in the United States and also around the world. Now, thankfully, there are some signs at this point that the Fed has. Someone's prodded them and say, "Hey, look down the track, ladies and gentlemen. There's some problems here," and maybe the conductors and the engineer are now looking a little closer at what the dangers are ahead. So we'll have to see. I think between now and the next week, we're gonna have a lot of volatility in markets. Proof will be in the pudding, and unfortunately, the Fed carries a lot of weight because of its power in raising or lowering rates and tightening monetary policy, and it has repercussions right around the world. We've already seen it in emerging markets. We've already seen it in other developed markets such as Canada, the impact of the tightening Fed, and now some of these repercussions are starting to hit the U.S. domestic economy. So that seems to be getting Jerome Powell's attention.
Well, President Trump did call the U.S. Fed his biggest threat. Do you think Powell was listening?
Well, whether he was listening or not, he probably heard it. And that probably makes it a little harder for the Fed to backtrack here. But I think the data, which they say that all they're looking at is the data in the market, which is, essentially the Fed admitting that it's not looking down the track, that it's just sort of looking at the ground and seeing, making sure that the ground is still there. The fact of the matter is, they've got to really take note of some of the data that's come in And it just happens to coincide with what the president said. Now, the president has been looking down the track. He does see some issues, and he, his horizon is a little different maybe than some others. I mean, he's looking at, his trade confrontation with China, and he wants to keep the economy going, so to have a strong hand with China. But in general, though, the president has probably been ahead of the curve on where the Fed should be, and the Fed is now going to kind of come into line here. But it's not because of the president, but unfortunately, the Fed now is having to look like they're kowtowing to the president, but that's their own making.
Now, the Fed has said they're going to make their decisions based on data. Well, isn't data looking into the past instead of taking a look to the future?
Well, it depends what data you look at. And you can look at, if you look at the 10-year break-even data, which is in the Treasury market, which gives you a forward-looking assessment of where inflation is going to be. When Jerome Powell took over the Fed a year ago, I believe it was February last year, inflation was trending up towards the 2% target, the expectations, and it was a nice trend upward. Well, sure, that gave them some ability to tighten monetary policy, but since the fall, it's been a one-way trip down, and in fact, the inflation expectations are hit a new one-year low yesterday based off of that measure. So Powell's got a real problem if he keeps on the same track. He risks having inflation expectations collapse, and that would undo all the work that they've done in trying to get it up to 2%. Mind you, I'm not a believer in the 2% inflation target, but that's their target. It's not my target, and now they're moving in the opposite direction. I don't believe we're going to have a deflation. There are others on your shows who have promoted that perspective, and we'll all have to see how it plays out. I don't have a huge degree of confidence that we won't have deflation, but in general, though, the Fed seems to be trying hard to go back to the problems they had a few years ago, where they were worried about inflation getting back to 2%. Well, they got it to 2%, and now they've driven it all back down below 2%. So, when you're looking at this 2% number, you think, okay, well, are we splitting hairs? Well, no, it's one of the key benchmarks that they operate on, and now that they're slipping below 2%, it's going to catch their attention, and we'll have to see how they react. It's going to be hard for the Fed to keep on a brave face and keep talking about this backward-looking data like you mentioned, which is typically the labor market. We all know that. Everybody knows that. But the question is, where's the labor market going to go? We've seen trend up in jobless claims, and continuing jobless claims have been trending up. We're not at any panic. We're not at any recessionary levels, but the trend has changed. So is the Fed looking around the curve, or are they just, staring down at the ground? And we'll see. We'll see next week. And I think markets, they'll probably start to anticipate one way or the other, but that'll be a key. It'll be a key meeting, and on balance, I have a hard time believing that Jerome Powell is going to want to be the Grinch that stole Christmas, because then he will be the subject of, I'm sure, a tweet storm the night before Christmas, and I don't think any Fed chairman necessarily voluntarily wants to do that unless they have a super high conviction level that what they're doing is right, and going into continuing a tightening mode here. I just can't see the Fed having that high level of conviction, even based off of some of the data that they're looking at.
We'll have more with Ted Dixon right after the break.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
Welcome back. We're speaking with Ted Dixon. Ted, a few people have suggested, because it was so hard for companies in Canada and the U.S. to get the employees they have and retain them, that perhaps if the stock market goes down, they won't be laying off employees the way they used to in the past. Can you see that happening, or will mass layoffs happen again if there's a recession?
Well, I think you hit the nail on the head. It depends on the nature of the recession. So if there's a financial shock like we had in 2008, well, you could see large layoffs. But if it's a recession where it's demand, falls off, companies will try and keep their best people as long as they can. That's for sure. But this problem with the labor market, that's due to, again, the Fed and the Bank of Canada's own making through their massive manipulation of the credit markets and their subsidization of the education industry, the high-end education industry in this country and in the United States with low rates. And there's also been governments that have been involved too. It's not just the Fed, but especially in the U.S., there's been this huge increase in student loan debt. People have been taking on huge investments in higher education in some of these degrees that probably are misaligned with the labor market, misaligned with their skill sets. It's just been a big mess. It's like the housing market was in 2007 in the U.S. Overinvestment in the wrong areas. It's kind of like Vancouver. We've got too many condos for investors, not enough condos for people who actually live and go to live in the workforce here. So you can thank central bankers and governments for all these misalignments. So I don't really know what the next recession is going to look like. I bet you it's going to be something different than the 2008 one, because the structural situation has evolved quite differently. We will have to see. But yeah, initially people won't want to lay off their best workers, and I think that's the case in any recession. The question is though how slow will demand, how quickly will demand slow, how fast will companies have to react, and my sense is, and this is really not a forecast, just a guess. I think we're probably going to have a slow motion recession. That it won't be like 2008 where people were worrying that the ATMs were going to stop working the next day. It's just going to be a slow grind into the ground, and that will be a different dynamic than we saw in 2008. So, but we'll see. We're not there yet. Fortunately, there are some positive signs for the market going forward. Unfortunately, right now they're kind of peripheral positive signs, but let's take what we can get here in the sense that copper's stabilized. Nicholas Winton, who writes our technical blog, has written about that a number of times. That copper's stabilized. Now, it hasn't been soaring back up, but another industrial metal that I watch closely, tin, has stabilized. Now, is this just a consolidation before another leg lower? I don't know. Is it consolidating to move up because global growth is actually going to rebound? I don't know. We're going to have to wait and see. Unfortunately, on some of the key metrics for the market, they're not as healthy, even as those consolidations that we're seeing in the industrial metals. So let's look at the four we talked about on our last show. We're looking at for a performance of the Canadian Insider Index against large caps. Well, last week we had that for the first time, but 1 week doesn't make a trend. This week is kind of mixed. This week started off weak, but so far today it's been pretty good. So maybe we'll start to see some outperformance there, but we're not there yet. Our sentiment indicator, which would give us an indication whether we've seen peak insider buying, it's not there yet. We still haven't seen peak insider buying. That usually happens around market troughs. And then on the U.S. side, value and growth, they're still slugging it out. Jim, if we really do have a strong economy that the Fed is always trying to convince us it's there, we would expect value stocks to do very well because there'd be so much growth that people wouldn't have to pay up for it with expensive stocks. They would go for the cheapest stocks they could find to capture that growth. We're not seeing that. And finally, financials in the U.S. are having a really hard time trying to show leadership. If we really have a strong economy, rates should be in a rising rate environment, financials should be doing well. They're not doing well. So, we still don't believe we've got confirmation that we've got a base in the stock market, but there are some signs that maybe outside of North America, maybe, in emerging markets, they're picking up on the Fed backtracking, that there's a little bit of confidence coming back on the assumption that the Fed is nearly done here with its tightening. So, that's the glimmer of hope we have going into 2019. But the reality check is North American markets, and particularly markets in the U.S., are not a screaming buy yet at this stage.
We'll have more with Ted Dixon right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, Rachel Notley's plan to cut back Alberta's oil production by nearly 9%, that hasn't taken place yet. Western Canadian Select Oil has almost closed the gap between what West Texas crude is trading at. It's about, an $11 spread when just a short while ago it was $50.
It's amazing what happens in markets when governments start to intervene or threaten to intervene, isn't it, Jim? So that was quite a move. Not too surprising in that it would have forced speculators and those who were short the differential to cover. But, is this a long-term solution? No, it is not. In fact, it's a long-term problem in the making, because what's going to happen now if we don't address the fundamental issues of getting pipelines to go to Tidewater to diversify our customer base, what's going to happen? Well, every time there's a problem, you're going to have a group of producers run to the government and say, we need production cuts. The production cut genie is out of the bottle. You will now have a group of highly motivated actors in the oil patch to look to that solution whenever it suits their needs. And, that would just be a rational response to any player. So, but this is a game changer. I don't think it's in the short term. Look, it's great, but the market's not really buying it. The stocks aren't, the differentials have improved, but the last time I checked Canadian energy stocks, they're still in wait and see mode, because I think investors know that, if you're looking to government to be the solution here in terms of trying to fix the price, then, you really got a serious problem. And I think that's the overriding message from what Rachel Notley has done. And I don't blame her for doing that. They were trying to do something to improve the situation on the ground. So and there's only so much a provincial government can do when it's the federal government that's causing all the problems.
Could Ottawa have simply said, we're using the notwithstanding clause, we're passing the Canadian Pipeline Act, we bought the pipeline, it's going through, and that's it? Well,
they could have, or something similar. I mean, I'm not a constitutional expert, but if there was a high desire to get things moving, Ottawa could have done it. I mean, this has been a problem in the making for a long time, but I just don't see the sense of urgency out of Ottawa to fix things. They've got this sort of plodding, we're going to make everybody happy as much as we can along the way. Well, I'm sorry, sometimes you can't make everybody happy, and you've got to get something done. Instead, the Trudeau government's chosen to get nothing done, okay, except spend a bunch of money, and that's just the facts, okay? I'm sorry for those who, are big fans of the Liberal government. I'm agnostic when it comes to federal politics. I just call it like I see it. And they've got nothing done on the energy file, and it's, it's really remarkable that they're still kind of plodding along here, given the importance of the industry to Canada. So, their hope is that they're going to get something done before the next election. They can at least show that they've got a shovel in the ground, and that's pretty pathetic. The whole handling of that file, and to give some balance, though, this is not entirely Justin Trudeau's government's fault. The Harper government, they didn't carry a lot of footballs across the finish line when it came to pipelines. Yes, I know there were a lot of pipelines internally that got built, but none of the key major pipelines got built, and they left that up to the Liberals to finish, and so far nothing's been finished. So here we are, and we can only hope that at least the Trans Mountain will get built. That'll be better than nothing, but so far it's as you know, it's just sitting there.
Is it surprising that some surveys show that BC will lead the Canadian economy next year? Is it because of LNG with the giant project in Kitimat coming online?
Well, I think the BC economy had some momentum over the last few years from the real estate area. That, I assume, is starting to dwindle, but then you do have some of these larger projects such as LNG Canada, which is a huge positive story in the Canadian economy, so that may have a lot to do with it. I haven't looked at the numbers, but the only problem with that forecast is I think maybe that forecast might be ignoring the drag that it's going to have, that the taxation policy of the provincial government is going to have. They're overtaxing the economy, and that's going to impact how much we don't know right away, but it will eventually bog down the BC economy. Whether we're at that point yet, I don't know. But they do have some wind at their backs in terms of some momentum. So that's probably helping.
Also, when they come up with the cost of living index, I know they have a basket of goods they look at, but does that basket include the tax burden that people have? Well,
it depends how you calculate it. Are you talking about the CPI?
Yes.
Basket?
They'll say inflation is 2%.
Some taxes are included in that, but I in terms of income taxes and the like, I'm not sure whether income taxes are in there. I don't believe they are, but there are a lot of implicit taxes for sure that get caught in that, and so in that they trickle through to more expensive goods and rates that people pay. They would be captured, and they can have sizable effects at times.
Ted, thank you so much for chatting with us.
Well, thanks for having me back, Jim, and have a great Christmas. And to all your listeners, I don't think I'll be talking to you before Christmas time, but enjoy the season, and we'll talk to you sometime, hopefully between Christmas and New Year's.
Happy, merry.
Thank you.
My guest has been Ted Dixon, CEO and co-founder of InkResearch.ca, his website CanadianInsider.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. If you have questions for Ted or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Best of the season.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.